to the opportunity to make a foreign exchange revenue on the transaction. I think most financial institutions in the United States say, hey, I'm going to charge you $30 for this $1 million wire that you're sending out, and that's all the money I'm going to make. And that's insane when then the intermediaries are making like $3,000 in the foreign exchange for that same transaction.
Hi, and welcome to another episode of FI Today, the podcast where we talk about all things banks, credit unions, payments, and more. My name is Kevin Miyamoto, co-founder, COO of Identify, also known as Moto. And in this episode, we have the newly appointed Dr. Jorge Jimenez on the call. Jorge, love the background. Welcome to the show.
Thank you. Thank you for having me, Kevin.
It almost looks fake. It looks like an awesome fake Zoom background.
That's what I typically do. I do fake backgrounds, but for whatever reason, with this platform, I couldn't put a background. So, hey, I had to do the real thing.
And before we jump in, we have a really, really good podcast today talking about international payments, which is, I'm always wondering myself why it's so hard. I know, Jorge, you have a lot of thoughts on that. But before we jump in to the background, to global payments, the topic, why don't we give the listeners a little bit of background on, what you're working on today, and why you're one of the experts in international payments.
Oh boy! All right, so I am currently I wear two hats. I am the founder and president of Juniper Payments, which is part of the PSU family of companies, and which we work specifically on payment systems like FedNow, RTP, FedWire, ACH, that kind of thing. And I'm also founder and CEO of Global FinTech Forum, which is a company that specializes in international payments and making it simpler for financial institutions to basically be able to send transactions in a competitive manner. So I've been in payments for about 20 years. I started with the Italian Central Bank. Almost right out of college, I was thrown into developing the single European payment area new payment system when the euro came out, and kind of come up for that system that would connect all the countries in Europe. And ever since then, I've been involved with central banks and market infrastructures. I work again with the European Central Bank, with the World Bank, I worked with the Federal Reserve Bank of Atlanta for 6 years on the international side. I worked for the U.S. Treasury as doing payment systems and financial inclusion. And then one day I decided, all this government work or infrastructure work is great, but it's really not necessarily solving the problem of small community banks and credit unions around the country, and as they don't necessarily have the tools that they have necessary to do this international transactions. So did you just say, Kevin, why is this too complicated? What did you say?
So it's really complicated. Payments in general are complicated, but international, it's so complicated.
Well, there is a very simple reason for that, and simple is the fact that there is no international payment system. How's that? So it's like a collection of different banks all over the world exchanging accounts with each other, and then they are communicating. They have been communicating through a secure network called SWIFT over 50 years. But that is like to say for Citi, Chase, Bank of America, the banks that really have a lot of international presence and the ability to have corresponding accounts in other countries. But if you are a community bank or a regional bank or a credit union, you don't have that. So you need to figure out a way to do those transactions. And you would think, wait, in the United States, we have the Federal Reserve, we have the clearinghouse. Isn't there like an equivalent for international transactions so that there is like a government-based or some sort of infrastructure? And there is not. And so that's part of the problem. So these transactions, when you do an international transaction to the SWIFT network, it's basically very expensive, a lot of compliance. The big financial institutions don't want to do business with smaller financial institutions because they need to know your customer's customer type of situation, and there's a lot of cost associated with that. And so there's a problem, and there's a problem that I would call this, I like to call it an exponential market failure because it's getting worse with time, and in terms of international payments. So there is ways to address and resolve these things, and I actually wrote a paper that, surprisingly, but but that might be too TMI for this group. But there is opportunities for small and medium-sized financial institutions to capitalize and compete on the international market, provide remittances, provide international payments in an easy way. And but yeah, there's so much we can do better, and there's so much we can learn from the other countries as well.
Well, yeah, and I can hear all the passion in your voice. I mean, there's definitely a lot of opportunity for improvement. Whenever I think about, credit unions and community banks, you'd mentioned right now folks are using the SWIFT network, and you said it's 50 years old. I don't know, has it really evolved that much in the last 50 years?
Well, so I want to be careful with what I say because I have a lot of really good friends in SWIFT, so I don't want to get the impression that they're not evolving and going forward. But in a very weird way, what SWIFT is a secure way to exchange information. So right now, but back 50 years ago, you didn't have email. 50 years ago, you didn't have APIs. In fact, back in the day, you would exchange information with telex, which were these little tapes with holes in them, and to send information. So now with APIs, with secure email, you can actually have a relationship with a counterpart, say in Spain or in other countries, and then just exchange information with the API. You don't only need to use the SWIFT network. You have other alternatives as well to do that.
Yep.
And then there is ways to manage the settlements for those transactions without necessarily having correspondent banking accounts at all these different countries. But again, I digressed on that. But SWIFT is obviously being the gold standard under that point of view for correspondent banking and international transaction. In fact, many countries in Latin America, Africa, and Europe use the SWIFT network and format as their domestic payment system.
Oh, no kidding.
In the United States. Yeah, absolutely. In fact, if you are trying to send a transaction to Europe, they will ask you, hey, what's the BIC, which the BIC is the routing number in Europe, and what's the IBAN, which is what's the account number, and those are SWIFT formatted information. So if you were to use the SWIFT network to send a transaction to a different country that doesn't have that infrastructure, you still would use the BIC. But anyway, we're getting too deep into this.
Well, I mean, you mentioned it. You mentioned in Europe that's how they kind of exchange information using the BIC and the IBAN.
Yeah.
I know that you're you've traveled all over the world. You advise companies from all over the world. You know what's going on at an international scale. So what is happening in Europe and in Latin America and other countries? How are they kind of approaching cross-border international payments and domestic payments too? It sounds like they're looking at everything a little bit different than the U.S.
Well, internationally, we are all on the same boat, really. The interesting thing that I think I would tell financial institutions in the United States and to look for is to the opportunity to make a foreign exchange revenue on the transaction. I think most financial institutions in the United States say, hey, I'm going to charge you $30 for this $1 million wire that you're sending out, and that's all the money I'm going to make. And that's insane when then the intermediaries are making like $3,000 in the foreign exchange for that same transaction. But in terms of the domestic, what's happening in other countries, I'll tell you this, because unlike the United States, in other countries, you have the government or the central bank kind of establishing the rules of what should be happening for consumer protection and otherwise. They're saying, hey, you obviously, Kevin, you're part of the Faster Payments Council, and like about FedNow and RTP and all that. But that has been a voluntary endeavor here in the United States. In Europe or in other countries, they say, hey, we're going to start using the equivalent of FedNow on this date, and all banks need to be ready in the country for it, and all the core providers need to be able to provide APIs to integrate to it. And so that's a big difference. So this happened in other countries 15 years ago. So we're about 15 years behind everybody else. At the same time, we've learned from what they've done. So what we're seeing right now is, if you've seen Venmo or Cash App or any of these guys, you see that they have a QR code to do payments, right? Or you have your Apple Pay on your phone to do payments. So you're not necessarily using your cards as much as you were before. So what's going to happen is, while Cash App and Venmo are closed loop systems, with the advent of FedNow and with RTP, you're going to be able to have financial institutions exchange money among themselves for their customers and their members with a QR code. So what you see in Bolivia, what you see in Colombia, what you see in Spain is that you go to a bar, you want to pay for a Starbucks or whatever, and they have a QR code, you scan that with your phone, and an equivalent to a FedNow or RTP transaction occurs in the back end. So the direction that we can learn from other countries is there's probably going to be maybe less cards in the future, but it's hard to say because in the United States, we start a new payment system and we never get rid of the old one, like Rich Oliver used to say. And so that's interesting thing, and that's probably why. And this is a speculation, why Visa and Mastercard are buying a lot of electronic payments companies. So maybe to secure their future, if by any chance there is less credit card transactions coming on in the future. So I think we all need to pay attention to this. I think financial institutions need to pay attention to the evolution of payments into more electronic manners and more through the instant payments route, and also pay attention of how to capitalize on international payments to get new fee income for themselves, and or to have a more efficient way to do transactions for their members and customers, so they don't have to go to Western Union or to go to a bigger financial institution.
Well, and that's what I wanted to unpack that a little bit more, because you hit it on the head, especially the smaller credit unions, community banks. They're making just pennies on the dollar compared to what the intermediary banks are making when sending out those large international wires, right? You'd mentioned $30 versus $3,000. Obviously, it's a massive difference. So,
yeah,
what is, what has been the challenge? Like, why haven't community banks and credit unions been able to take advantage of that traditionally? And going forward, what are things that they can do where they can start to get a piece of that pie?
Well, the challenge in everything is inertia. The challenge is looking at things like, we've always done it this way, and this is my department. I don't need to be looking at this department, and so that's probably the main challenge. It's a mindset issue, and kind of like trying to get out of their existing guardrails to move up and do new things. So that's the main thing. But it's interesting. For example, some of the customers that we had both at Juniper and GFF is we have been able to turn what is like a cost center, like ACH processing, into a revenue center, because all of a sudden is not just a supporting function for other businesses, it's a function that is making revenue on its own accord. So that's a big interesting thing. So if you ask anybody in the operations, like, hey, how would you like to be indispensable for the free income revenue of your company or your bank or your credit union, they say, of course.
Yeah.
But it's hard. It's hard because you need to have the CEO and the board bought into this, and so I think the biggest challenge is inertia. We're like when we talk as GFF and Juniper Payments to our customers, we always tell them what options they have available, and they pick and choose what they like to do. So, and if, as you say, what can they do? We're happy to have a conversation with them in that direction, but again, not just with us. We just tend to have things to have done things in a certain particular way, which we believe is a little bit more innovative. For example, just silly question or silly issue rather. Everybody calls international transactions international wires, right? Yes?
Yes.
International wires do not exist. It's kind of like you send a domestic wire to a correspondent that then turns that into a SWIFT transaction overseas. So that what we do is a little different. We have a relationship directly with a payout provider in the destination country, and these providers have an account in the United States, and we send them an ACH transaction for settlement, which is obviously less expensive than sending a wire. So you're already eroding some of the cost on the front end, and it's the same. It's final and irrevocable. It goes the same way. It goes at the same speed, if not faster, than international wires. So sometimes the mindset is important. And I know the little things. We've been calling it international wires, and we've been wrong for years.
Yeah,
So
yeah. Well, I think when I hear you talk about it, I agree with you totally. You're spot on. The other thing is, if you think about ACH from kind of a cost center to like a revenue driving part of the business, turning payments into revenue driving, it's
yep,
also way less risky, right? As opposed to debt, where a lot of credit unions and community banks are focusing on are large loans. Maybe it's commercial real. It could be a variety of different types of debt. Um, but especially in today's market, like that could be pretty risky, right?
right.
Um,
I'm gonna put a caveat for what I'm about to say next, because I agree with you that is doing fee income on payments is low hanging fruit. However, you cannot underestimate the importance of fraud and liability on transactions when you're doing two payments. In fact, that's probably
mhm.
one of the biggest things that you're going to have to look at as you move transactions, say, from credit cards to electronic payments like FedNow or RTP or whatever it might be. Um, the liability falls on the originator of the transaction, the consumer of the business. What right now, all those consumers with the credit card transactions, the liability, they have zero liability. So
Hmm.
that's a big difference that you need to kind of address. So in terms of what I will say is just is it's the fee income you're going to get from payments is more secure than the one you're going to get from loans, but is at the same time is not. When you say we say safer, we just need to be careful, making sure that we have put in place the proper fraud channels in that process.
Yeah, yeah. No, that's a great caveat. Thank you for pointing that out. Um, and the other thing. So as I hear you talk about all of this, you also mentioned, in other countries that QR code example where at the Starbucks they're using a QR code and using the equivalent of like an RTP or FedNow transaction to settle that and have the customer get their coffee. The U.S. I know it's a lot of credit card. Like me personally, and I might be weird or different, but like I try to pay everything by credit card just because of all the points.
Hmm.
So what are your thoughts on that, Jorge? Like me as a consumer right now, if I had instant payments and I'm like I could pay at Starbucks by a FedNow transaction, I still would rather use card because I use those points to redeem airfare and all that. So what are your thoughts
No,
on that?
that's a great point. I think that most of the use cases right this second uh, for instant payments are going to be more associated with bill payment,
Yeah.
payroll, that kind of thing. But I think that the other part is coming where the merchant will say, well, rather than paying 3% to my credit card processor, I'd rather give my customer like 1.5% store credit or whatever it is.
Hmm.
So
Hmm.
they need to come up with those models. So right, they need to make it enticing for you to want to do that, right? Because there is the points issue and then there's the liability issue. But once you figure those two things into your business model, then you have a very interesting opportunity there to kind of own the customer. And so, I to your point, I think that might be step three into the instant payment route, and also when we have more ubiquity in the system. But yeah, that's a great point.
Yeah. Well, and so I guess what are your thoughts in terms of like where's the U.S. going with all of this? I mean, um, instant payments. I know FedNow is very new, right? RTP's been around for a while, still gaining a lot of momentum. Lots of new capabilities with international payments, not wires, international payments, right? And just technology evolving. How do you see this all playing out?
Well, I think this is a phenomenal opportunity for innovation at the U.S. level. Let me put it in these terms. One of the biggest issues that financial institutions have been dealing with is with the pre-funding of transactions. So I want to make sure that any new product or service that they provide, they need to make sure that they get money from the member or customer account to put it in what is called the general ledger, which is the holding account of the financial institution, and then they can get it out, and it will be there eventually. Blah blah blah. So imagine a world. Let me rephrase that. You look at Bank of America, and it has all these different branches all over the world, and they work together in concert and everything else. And they give you a unified experience to a certain degree. So think about all credit unions, all community banks that could work in the same way Bank of America works with itself, because they're able to send transactions between them at the same speed that a financial institution with its own branches would be able to do. So this is opening up a world of open banking, a world where you create like a financial app store, if you like, so that fintechs can provide services to financial institutions, and they can work seamlessly on the settlement with the financial institution. So I think it's going to possibly going to bring a new, I was going to call it banking 2.0, where you are going to have a situation where we no longer work in batch, but we work in a real time, and it doesn't matter anymore which financial institution we're working with, because you are sending these transactions in real time between the fintech, the financial institution, and you have a much more holistic approach to banking. And so that's what I see, personally speaking. And because right now if I'm a business owner, right now I have 5 accounts. I have a main account, and then I have these other accounts. Then I have maybe some sort of system to kind of treasury management to seal them all together. But if I want to send money between them, I cannot do that in real time. It's really hard to do it in real time. So now imagine you have FedNow, you can do that. Let's say now I'm using this service to do this specific function. We can fund those transactions in real time and automate all that through solutions like instant payments. So I think we don't even know what's coming under that point of view beyond utilization of real-time payroll and KR codes and everything else. But I am really interested to see how this is going to affect the banking app fintech world in the United States when the lines between the different participants are now blurred because everything is done in real time.
Yeah, and this is going to be a long, kind of probably random answer, if you will, but I totally agree with you. And from my perspective, especially with instant payments, FedNow just coming out, it almost resets and levels the playing field. Where if you're a smaller FI and you are able to send and receive RTP and FedNow transactions, and you have similar, like you already have ACH, you already have Wire, you can already set up money market accounts. You can do almost everything that a large bank can do, right? And so for me, then it all comes down to what is the customer experience that you're giving, and what does the engagement look like to really differentiate yourself versus some of the other larger traditional players. So I agree with you. I think we're going to see a big shift there in how really the focus will be on driving customer engagement, because I think capabilities wise with fintechs partnering more and more with smaller FIs, they're going to have a lot of the same capabilities that they maybe didn't have before.
Yep, I agree. And so this is very exciting, and that's why I think smaller financial institutions, most financial institutions should try to make this a priority and in that direction. And then don't forget, in terms of the United States, the U.S. Treasury is a participant into FedNow, which means that if you want to receive like a FEMA payment, if you want to do an IRS real-time payment, if you want to do any of that stuff, or I always joke around, like the IRS can now refund you in real time. Good luck. But I'm just saying that's possible now because of the Treasury in that direction. So the bigger the network becomes of participants to the FedNow and RTP world, as well as there are other instant payments networks, including ourselves. We have one for our own for our customers. The more you can expand on that and make that available, I think you're pushing in the direction of creating the ecosystem for a holistic banking approach.
Yeah, absolutely. And so, Jorge, as we wrap up here, I keep going back to your point about the smaller FIs. There's an opportunity now where they can start to earn significant revenue on international payments. I think that is just huge and something that just was not even possible, a decade ago or so. So
yeah, yeah, and I'll say something else on that. There is a number of financial institutions abroad that are looking to open accounts in the United States with financial institutions in the United States, and it might not be worth it for some of the bigger banks because there's not enough money, but for a regional financial institution, a smaller financial institution, it may make a big difference in terms of the amount of deposits they're able to bring in. So the world is their oyster, as they say.
Absolutely. So, thank you so much, Jorge. Any last words for the listeners today?
Oh boy. So I'm just saying, what to say? Get to work, but try to enjoy life a little.
Yeah. And if someone wants to get a hold of you, Jorge, or has any questions for you, what's the best way for them to contact you?
Well, they can contact me at jorge@juniperpayments.com or jorge@globalfintechforum.com.
Okay, awesome. And on LinkedIn. I know you're on LinkedIn too.
I'm on LinkedIn. I'm definitely LinkedIn. I love LinkedIn.
Okay, great. Well, hey, Jorge, Dr. Jorge Jimenez, thank you so much for joining the podcast. Really appreciate all your wisdom and thoughts around global payments and just where the U.S. is headed in general. And for those of you listening at home, we'll see you on the next one.
Thank you, Kevin.